Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. We have another great show lined up for you today. Bitcoin has had a great run this year, and along the way, achieved some big milestones, including the official release of Bitcoin spot ETFs. Well, I have on the perfect guest to talk about Bitcoin and what is in store for the cryptocurrency moving forward and the future of asset allocation. But first, today's episode is sponsored by the award-winning Zephyr, which helps advisors, wealth managers, financial analysts, and investment professionals make more informed investment decisions. My guest today doesn't need much of an introduction, but here it is. I'm honored and very excited to welcome Ric Edelman. Ric is the founder of Digital Assets Council of Financial Professionals and is widely known as the most successful financial advisor in the country. He founded the nation's largest financial planning firm, which manages $300 billion for 1.4 million families. And Barron's Magazine ranked him the number one independent financial advisor in the country 3 times. Ric appeared on Oprah 5 times. And maybe my favorite part about the bio is that he was the answer to 21 across in a New York Times crossword puzzle. So with that, thank you so much, Ric, for coming on the show. Really, it's an honor to have you on. Can you please tell us a little bit more about yourself? Maybe that wasn't in the bio, and tell us a little bit more about Digital Assets Council of Financial Professionals.
Ryan, thanks for the opportunity to be with you. I founded DAC-FP back in 2015 because I had learned a couple of things in my experience in crypto. I first discovered Bitcoin in 2012 and pretty quickly just realized that this is a transformative technology that will have an impact comparable to the invention of the internet. And yet the majority in the financial services industry were not aware of that fact. And so I created DAC-FP as a crypto education company. We provide tons of online content, webinars, seminars. We do a live conference every year, Vision, which we're holding in June and May this year, in June in Dallas, I should say. And we offer the CBDA designation, the Certified in Blockchain and Digital Assets designation, which is listed in the FINRA database of professional designations. Thousands of advisors from 37 countries have taken the course. So it's really helping advisors recognize this is a new asset class that is here to stay. You can't ignore it any longer, can't dismiss it, and you better know what you're talking about or you're going to lose credibility with clients.
Sure. And you were on a little over a year ago, back at the very end of 2023, to discuss the release of Bitcoin spot ETFs and what was in store for them and how financial advisors can get ready to have conversations with their clients about the ETFs. Back then, I think there was what started with 10 or 12 Bitcoin ETFs. Now there's over 30 that are associated with Bitcoin. Also, the price of Bitcoin has increased to roughly 130% in the past year. And now we have a new political party that is more pro-crypto. So currently there's a lot of headwinds or tailwinds and wind in the sails of crypto. What could potentially be the next driver for Bitcoin prices to climb higher?
Well, we don't need any more drivers. We've got them. As you pointed out, not only is Donald Trump a huge proponent of crypto, all of his economic nominees are strong crypto supporters. We now have a majority of Congress supporting crypto. It's no longer just Republicans who support it.
Okay.
Democrats do as well. Over 250 members of the House and all the chairs of the House, Senate, the House Ways and Means Committee, the Senate Banking Committee, the 2 chairs of the digital asset subcommittees in the House and Senate, all strong crypto supporters, because they learned their lesson in the election. Of the 58 candidates running for the House or Senate this past election who were favorable of crypto, there were 59 of them, and 58 won their elections. Those candidates who opposed crypto lost. So Congress has gotten the message that this is something the country wants. There are 50 million Americans who own Bitcoin or other digital assets, and they want the opportunity for this technology to grow and thrive just as other technologies are doing. So the tailwinds are very strong behind us. What you're now going to see is the implementation of this. Now that we have a Congress willing to write laws, a president willing to sign them, who has appointed to the SEC, the CFTC, the FDIC, chairs who are all favorable to crypto, you're going to see regulation coming out of the administration that not only lay down the rules that govern how companies can engage, but those rules will be favorable. And this is going to unleash the incredible potential of Wall Street over the next 18 to 24 months. It's going to be very exciting. And everybody is widely anticipating that the price of Bitcoin will rise significantly as more and more of these institutional investors and businesses get engaged.
Well, and Rick, you just since the election, Bitcoin has been up, I think, 50% since the election. So it goes to your point of, very it's not just Republicans, it's Democrats, and really across all of Congress.
Yeah, but we're just getting started because still the majority of brokerage firms on Wall Street are not yet recommending Bitcoin to clients or even making it available to their customers. Institutional investors, such as endowments and pension funds, are not yet allocating to Bitcoin, but they're all working on it. The
Mhm.
brokerage firms are waiting for the regulatory structure. For example, Rick Wurster, the CEO of Schwab, said that as soon as the rules are made clear, Schwab has every intention of making Bitcoin trading available to its customers. All the major Wall Street banks have said the same thing, that they're happy to custody and trade digital assets. They just need to know from the SEC and FINRA what the rules are for doing so. Those rules are being written as we speak.
Yeah.
So they haven't yet gotten engaged, and that means their tens of thousands of advisors have not yet gotten engaged in recommending this to their clients. Simultaneously, institutional investors, endowment funds, pension funds, hedge funds, and the like, these folks have not yet allocated to Bitcoin in a significant way. Hedge funds are doing it
Yeah.
pretty well, but not yet the pensions and endowments. And that's because of their bureaucratic process. They've got to have their due diligence completed by
Mhm.
their investment committees. Those recommendations have to go to the boards. This takes time. These boards only meet 4 times a year, so they're not even going to get it on their agenda till Q3. And that means they're not going to begin allocating till Q4 or into next year. So the asset flows from institutions hasn't really yet begun. Once it does, you're going to see a flood of new money going into Bitcoin. And since the supply is fixed, the
Yeah.
increased demand will naturally make the price rise.
Interesting. I'm really glad you brought that up about Wall Street institutions still haven't put the infrastructure in place to offer to their advisors. So it's a perfect segue into kind of my next question is about financial advisors. You notice that you said at the beginning that you've had a huge growth in people interested in DAC FP and getting the designation. Have you noticed any other material change in the way financial advisors view crypto? Maybe they're not as cynical as what they were 2 years ago now that the Bitcoin ETFs are available.
We poll advisors frequently, and the what we have discovered is that the number of advisors who personally own Bitcoin is at, is at the highest level ever. Nearly half of all financial advisors personally own it. The number of advisors who are recommending it to clients is also at an all-time high at around 15%. That number is still low, and you wonder why is it that half of advisors own it, but not, only a third of them are recommending it. It's because of their compliance departments.
Mhm.
Firms are still struggling with trying to figure out how can we make this available to customers? What are the rules we've got to lay out? How do we deal with suitability, best interest? Which products do we pick? Should clients invest? And if so, which clients? And how should they invest? Which kind of products? And how much of the portfolio should be allocated? So firms are trying to figure all this out. They'll have it figured out within the next year because they're all in a hurry now.
Yeah.
There is so much interest in this subject. It's getting so much media attention that investors want to engage when they call their advisors. They want answers. And
Mhm.
for an advisor to say, I don't know anything about Bitcoin, or my firm won't let me, all they're doing is telling that client to go somewhere else. And in
Mhm.
surveys, it's very clear 2/3 of investors say that they'll leave their advisor in order to find one who can help them with Bitcoin.
Well,
So advisors and their firms are increasingly realizing that they don't have a choice but to engage in this. There's
mhm.
really no reason not to. It's not a question of whether you like it or not, or believe in it or not, or even
Yeah.
frankly whether you understand it or not. This is simply a part of portfolio diversification. And if you don't meet the client's needs, somebody else will.
Mhm. And I want to talk about that shortly about portfolio diversification, but it's interesting you brought that up that a lot of firms are still, a year away when there was so much talk and anticipation about the ETFs being released. You would have thought they would have been a little bit more proactive in talking about compliance and getting, all that stuff, done. So when the release of the ETFs were done, official, they were ready to go.
Well, yeah, in a perfect world, I would agree with you, Ryan. But in the way that firms typically operate, uh, these decisions come from the top.
Yeah.
And if the C suite doesn't know anything about crypto, and most of them don't, or if they are negative on it, which most of them are, or if they're afraid of it, which typically is the case of compliance departments, that's really what it comes down to. They're saying to themselves, do I want to risk my business on this? If
Hmm.
I'm not getting a lot of demand from consumers, why should I care? And if we don't have a clear path from a compliance perspective, if the SEC and FINRA haven't made it clear how we are allowed to engage in a manner that will not get us into trouble, they're not going to do it. And you really can't blame them either. I mean, think about it. The typical crypto allocation is low single digits,
Hmm.
1 or 2 or 3%. Are you going to risk blowing up your whole firm over that? Of
Yeah.
course not. And that's why firms have been very slow to act. Nobody wants to be first, but
Yeah.
everybody will be happy to be second.
Yeah, for sure. For sure. How has it gone in the past year? We talked that the ETFs have gone from 12 to 30. How has it gone in the past year for the ETFs? Obviously, it's been positive. The number of offerings have increased.
Well, that's
But
not relevant. What's relevant is the uh, fact that these ETFs are the best performing ETF launches in history. In less than 1 year, they have collectively raised more than $100 billion.
Mhm.
BlackRock's is the leader. They
Yep.
raised 60 billion all by themselves. And this is why you now have so many more ETFs, because the ETF industry realizes this is a huge market demand. And this
Mhm.
is another illustration of why advisors and their firms cannot sit on the sidelines, because that's a massive amount of investor capital they're not managing, they're not earning fees on.
Mhm.
So are you going to dig in your heels saying, I don't like it, or I don't believe in it, or I don't agree with it, and harm your business? Of course not. This is why everybody is racing to catch up, recognizing they've waited too long. They were too dismissive for too long a period. They don't know anything about it, and they're racing to develop the knowledge and complete the due diligence process and evaluate the products. The
Mhm.
other big aspect to this, Ryan, is that the ETFs did something that hadn't existed until they were brought onto the scene a year ago. For the 14 years prior to that, there were no securities available in liquid form,
Mhm.
tradable, that were available to the financial sector. In other words, stockbrokers, financial
Mhm.
advisors, investment banks, brokerage firms, they are limited to recommending securities. This is why brokerage firms don't recommend baseball cards and rare coins and comic books. Those aren't securities. Well, Bitcoin is not a security either. Gary Gensler made that point very clear. So firms couldn't recommend Bitcoin
Mhm.
even if they wanted to. But now that there are Bitcoin ETFs, the ETFs are securities. The fact that they own Bitcoin doesn't matter. It's like GLD, the biggest gold ETF.
Yep.
It's an ETF first, investing in gold second. Brokerage firms never recommend gold, but
Yep.
when the GLD came on the scene, they could all recommend that. And that's what's happened with the Bitcoin ETFs. So firms were sitting on the sidelines for 14 years. Whether they liked it or not was not the point. They weren't allowed to engage. but now they can. And so they're all playing catch up. They're all racing to figure out, should we recommend these ETFs? And if so, which ones, in which combination, to which clients, and to what extent? They're all trying to figure it out. And they will within a year.
Yeah, fantastic. Great stuff, Rick. So you've talked a lot about asset allocation and diversification. Like you said, regardless of if you know much about Bitcoin or crypto, or you like it or you dislike it, there are benefits to a portfolio. A few years ago, I did a efficient frontier on a basic 60-40 portfolio, added Bitcoin to it. And along that efficient frontier, there was a slice, it was in some, the very most conservative, it was very minimal, but a slice of every portfolio was made up of Bitcoin. So whether you like Bitcoin or not, there are a lot of benefits to including it in a portfolio.
Well, we now have 15 years of data, which is wonderful. And we look at the last 10 years and we look at all of MPT statistics, standard deviation, Sharpe ratio, Sortino, max drawdown. What you discover when you look at a portfolio over the past decade, pick your time frame. 1, 3, 5, 10 years since inception, all the same way we do it for every other asset class. You discover that a portfolio that has Bitcoin, and I'm talking 1%, 2% of the portfolio, you improve the returns and you reduce the risks. All the MPT statistics get better. And this is the primary reason that institutional investors and financial advisors are so excited about Bitcoin. It's not because of the speculation. It's not because they think you're going to outperform. It's not because of the volatility. It's because of the low correlation. Bitcoin's price movements are independent from all other asset classes, which is exactly why you want to add it to a diversified portfolio. So advisors who believe in diversification ought to be loving Bitcoin. It has nothing to do with all the other biases that we've heard people talking about over the past decade.
And really, if you got your client's best interests at heart, you're focusing on goals and their objectives. Does it matter really what's in each individual sleeve as much as it does just reaching those objectives and their goals with the largest amount of return for per lowest level of risk? And like you said, Sharpe ratio. I mean, that to me is what's most important. And the proof is in the pudding there, Rick.
Yeah, I think that people are making too much a big deal out of Bitcoin. I don't know when it started or why it started or how it started, but Bitcoin has become an incredibly controversial conversation. People have extraordinarily strong views of it, more than you see in other asset classes. And I don't get it. It's just another asset class. It's not that big a deal. And you're only going to do 2 or 3 or 5% of your assets in it. So why are we talking about it 50% of the time? I mean, it's not that big a deal. So it's just fascinating to me. And the only reason I can think of as to why it's become so controversial is that it grew up outside of the Wall Street sector. And in fact, the original purpose, according to its inventor, Satoshi Nakamoto, was to eliminate the need for Wall Street and the financial services sector. So Wall Street, I think, began feeling threatened and saying, you know, this thing is supposed to eliminate the need for us. We therefore have to hate it. But Wall Street has now recognized rather than hating it, they are embracing it. And it's improving their businesses. It's making their portfolios perform better. It's allowing them to operate cheaper and faster and safer. And everybody is now beginning to recognize this technology is probably the most profound technological innovation for global commerce since the invention of the internet.
Fantastic. Do you think people, their openness to Bitcoin, and you mentioned it too, started improving to when you start doing this research and the studies and the impact it has on asset allocation? You know, we all talk about alternatives. Alternatives are all over the place: private credit, private equity, VC, you name it. Then you got to think about Bitcoin, whether you put in the alternative sleeve or a sleeve of its own. Do you think that's opened up the minds of
Yeah,
institutions and investors?
yeah, there are two kinds of investors, as we all know. There are the speculators, the people who are trying to get rich quick, and it was easy to look at Bitcoin's price performance over the past 15 years and recognize this is the best performing asset class in
Mhm.
history. It has gone from zero in '09 to $3 trillion today, the total crypto market cap. And of the
Mhm.
3 trillion, Bitcoin is two-thirds of it, about $2 trillion. Well, that has produced, I don't know, I think it's like a 70 million% return in that last decade and a half. And that's got a lot of people excited because of
Mhm.
what they view as quick, easy profits. But let's face it, most of us don't act that way. We don't think that way. We don't really have a lot of confidence in people who do think that way. We are more pragmatic, we're more practical, we're more careful and prudent, and therefore we look at more reasonable investment measures.
Mhm.
In the beginning, people were saying, look, the speculators are one thing, but I don't understand Bitcoin. I don't understand how you value it, how you price it. And Jamie Dimon, Warren Buffett were very famous for saying Bitcoin's worthless. It has no intrinsic value. But over time, people began to realize this argument, this philosophical debate over intrinsic value
Yeah.
is kind of irrelevant. Let's get into the real world and examine its usefulness inside a diversified
Yeah.
portfolio. And people are beginning to realize that the arguments are quite compelling for a little bit of Bitcoin in a diversified portfolio
Mhm.
versus no Bitcoin. And this is helping to persuade institutional investors as well as retail investors to do this. The question is shifting, Ryan. 5 years ago, people used to ask, why are you investing in Bitcoin? Because it was controversial, it was uncertain,
Yeah.
it was unproven, untested, and there was a lot of debate about being bad for the planet, being used only by criminals, that the government would ban it. There were all kinds of crazy worries that people had. Not so crazy, frankly, some of them back then. But today, you fast forward, now that the ETFs are here, the new administration is here strongly supporting it, the question has shifted. It's no longer why are you buying Bitcoin? The question now is why aren't you? And I don't mean that from a colloquial perspective. I mean that boards of directors of pension funds and endowments
Mhm.
are asking their investment committees, why haven't you added to our portfolio what has been the best performing asset class of the past decade?
Mhm.
And those investment committee chairs are discovering they really don't have a good answer to that question. Simply saying, I think it's a fad, or I think it's a fraud, or I just don't like it, or I think it's bad for the planet. Really? You own oil stocks? What are you talking about? Um, so I think that people are recognizing that they really don't have a good reason for not owning it. And they had, and in its absence, their portfolios aren't performing as well as others that do own it.
Mhm.
Which means if I run a pension fund and a bunch of other pension funds own Bitcoin and are outperforming mine, then I've got to figure out why I'm not owning it too. And so the FOMO factor is going to kick in the next
Yeah.
couple of years. Um, and I think this is going to help fuel the fire for Bitcoin.
Yeah, I agree. I agree. And just the more education that you are doing and your firm is doing, and the more research, like you said, there's 15 years now of data. So the proof is there when you look at MPT stats, whether it's sharp ratio pain index, whatever it is, it's all proven that, a small sleeve it's beneficial. So
But let's
great.
keep in mind, we all know past performance doesn't guarantee the future. We also know that this remains a new emerging technology. And there could be another new emerging technology that replaces it. Um, Blockbuster Video replaced VCRs, and then Netflix eliminated Blockbuster Video. Well, what's going to replace Netflix?
Mhm.
Something. I don't know what, and I don't know when, but something. And so this is why we don't want to get cocky. We don't want to get too comfortable, and we don't want to get too aggressive.
Mhm.
But I don't believe that a low single digit allocation is aggressive. I think zero is even more aggressive. I think zero is more of a definitive, extreme position than a 2 or 3% allocation is.
Yeah. Yeah. And really, at the end of the day, Rick, you've said it's about the client too, right? Risk tolerance, their investment objectives, what they can handle. But
Well, that
it's,
raises an interesting question about risk tolerance. If you're absolutely right. These things matter in choosing for a client the allocation and the investments for that allocation. But if you believed that the client's best interests were served with a Bitcoin allocation, and yet the client said to you, "I hate Bitcoin and don't want to touch it," what would you do? Advisors are being faced with this decision right now. If you know, if you have a high level of confidence that the client will benefit over the next 20 years by owning Bitcoin, and yet the client says, "I don't like it," are you going to demand? Are you going to try to
Mhm.
persuade? Or are you going to simply acquiesce and say, "Fine, if you don't want it, I'm not going to risk our relationship over it"?
Yeah.
This is a pretty fundamental question that advisors are increasingly being faced with.
Interesting, especially with that generational wealth transfer too. If you're a older advisor, and let's say you're a younger advisor and you've got older clients who maybe don't believe in Bitcoin, that's probably a very common conversation that they're having right now.
Or
Um,
the other way around, an
yeah.
older advisor who doesn't know anything about it dealing with a younger client in their 30s or 40s who asks about it.
Mhm.
So there's a lot of bias in this conversation.
Yeah.
And this is why education is essential, not only of the advisors, but of their clients.
Mhm. Fantastic, Rick. Such a great conversation. Thank you again. Like I say, it's an honor to have you on. I'm glad I didn't scare you away that first time and you came back on. Where can our audience get more information about Digital Assets Council of Financial Professionals, or DACFP?
Yeah, just go to dacfp.com, dacfp.com. You'll see all of our content online, plus information about our Vision Conference in Dallas in June.
Okay. Fantastic. Awesome, Rick. Thank you so much. It's really a fun conversation, so informative. I love it. And thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other podcasts on the Adjusted for Risk YouTube channel, as well as on Spotify and iHeartRadio. Thank you very much, and have a good rest of your week. Rick.